I'm pretty sure you've heard either from media outlet, radio, or TV, people talking about a recession. Recession is coming. We're all doomed. It's gonna be bad. The stock's gonna crash. Well, I'm gonna share with you in this video what I think about recession coming. What does that even mean to have a recession? And does that really mean that we are automatically doomed to go towards that direction? And in the case we are, how can you position yourself now in order to make sure you make a lot of money once we are at the other side of it? All right. So first off, let's start with this: a recession. What is it? What does that even mean? And should you be worried about that? Okay, let me start with this definition. If you jump on quickly on recession definition on Google, you're going to end up on this page. It's a period of a temporary economic decline during which trade and industrial activity is reduced, generally identified by a fall in the GDP in two successive quarters. All right. So, what is a GDP mean? A GDP is a growth domestic product. It's that figure, that amount, that number that will define how an economy, how a nation, how a country is actually producing and performing on the economic standpoint. When you take all the goods and services, everything that we as a nation are producing, products, services, whatever, when you actually add that and compare it to the others, you come up with the growth domestic product. So if for two consecutive period of 3 months, which we call quarters, we have that GDP going down, then we are theoretically, technically entering a recession. So it is not a bad thing necessarily. All right. So why is everybody talking about a recession happening these days? First off, when you look at what the market did, when you look at what the economy did last year, it was pretty interesting. It was pretty incredible because in 2020, the economic growth was still negative. And in 2021, it jumped to 5.7% from the 2020 annual level of a decrease of 3.4%. So it's a pretty huge jump of pretty much 7.58 points there. Now, it means that the economy ran really, really hot. If you also look at the stock market back last year, from 2020, this was the bottom of the pandemic, till here, the market gained 60%. That is huge. And then in 2021, boom, it also continued to go higher and higher, gaining 28% as of December 31st. So it is undeniable that the economy ran really, really hot for 2 consecutive years. Now, it is just normal and logical for the market to cool down a little bit, meaning, driven by the economy also cooling down a little bit, because all of this inflation that we're talking about, that we're hearing about a lot, is really driven by people continuing to buy a lot of stuff. People continue to order a lot of stuff, given the fact that still 2020, factories were closed. So it created what we call a supply chain issue, supply chain bottleneck, because everybody buying stuff at the very same time didn't help but to create those bottlenecks, making sure, as a consequence, creating the delays in the shipping, right? But with Ukraine and Russia, that was not help. And that is why people are now thinking that because the Federal Reserve, the central bank, in order to fight inflation, has to do nothing but to increase interest rates, which they already announced that starting from today, interests are going to go up 0.25%. And they're going to have the ability and the possibility to also continue to increase those interest rates for the next 6 times they're going to meet. All right. So we are possibly looking at interest rate increasing very, very significantly this year and the year coming in 2023. So, but does that necessarily mean that the economy and the stock market is going to go down? That's where I think I don't necessarily believe that. Why? Because this type of inflation has been caused by people having a lot of money coming from stimulus checks, all right, especially here in the US. So it is not an inflation that's been caused by a bad thing, if you will. It has been an inflation caused by a good thing because whenever people buy stuff, it means they have money, right? And that money flows into the economy, hence making the economy really, really hot. That's number one. Number two, even with this Russia thing, the Russia-Ukraine conflict, the odds of the economy slowing down but not crashing is still very high. So when you compare the two other recessions that we had, the number one was in 2008, the most obvious one. But back then, people and companies were sitting on a very different positions. If you look at the balance sheets, if you look at how companies are run, if you look at the amount of money that companies and the amount of debt that companies have, it's definitely way better than if you compare this recession coming to what we had back then in 2008. If you also took, I mean, if you also take the consumers, people are still buying stuff, not to the same extent they were using to buy stuff last year and the year before, but they are still buying stuff. Why? Because they still have the remaining stimulus money. And on top of that, the wages are going higher and higher, not to the extent that it will create a wage crisis spiral, but I think it's going up to the extent where it can actually help consumers, you and I, battle the prices increasing, causing inflation. Now, on the other ends of things, inflation is going to at some point diminish a little bit. Why? Because it has been caused by the supply chain issues. It has been caused by people not having to get exactly what they wanted when they had the money to buy it. That's why if you want to order a new car now, it used to take you few hours to get the keys, but now you have to wait a few months or few weeks to get that car depending on where you live. So by the time there's going to be enough supply into the market, it goes for the real estate, it goes for cars, it goes for food, it goes for any other thing, clothing, etc., etc. By the time we'll have a balance between the supply and the demand, I believe inflation is going to slow down a little bit. So by the time that comes in maybe the end of this year or the other half of this year, the second half of this year, then we might start to see some pressures being relieved there. But ultimately, the recession people are calling, I think it's a misconception on the economy slowing down. Because if you look at the prediction of the growth of the GDP, meaning the growth of the economy in the US this year, we're still looking at maybe a 2.8%. So 2.8% doesn't mean we're going to zero. It just means that the expectations we had compared to last year will be lower because last year was a phenomenal year coming back from another phenomenal year in 2020. So it is just a matter of natural, logical, trending thing that it will cool down a little bit. But in the event the crisis in Russia and Ukraine gets worse and linger on time, then yeah, we might have a risk of recession actually happening fully in 2022 or maybe definitely in 2023. But again, I don't really see that happening a lot. Now, because we don't know the future, because we are not fortune tellers and we need to be prepared, let us see how you can actually position yourself now in the event we have a recession coming. So first off, when recessions do happen, it creates discounts in the stock market, it creates discount in the real estate market, and it creates discounts in the economy. Why? Because a recession means that, well, the economy will slow down, right? But people who have been sitting on huge amount of debt, or people who are sitting on mortgages, people who bought a lot more things that they needed, real estate, stocks, and everything, they will be inclined to sell those assets. Why? Because the economy is slowing, so the price of the stock market, the valuations of some of the companies on the stock market might also go down a little bit. So it might create the curve to start going down in both those markets. So it will be interesting and definitely a smart move for you as an investor in the stock market to actually buy some stocks because they are going down. It's literally as if buying your favorite items on a store on sale, not maybe a 5% or 10% as you used to, but a 20 to 35% on some items, even further than that, greater than that. So You buy now in the you buy stocks, that's one way of going, but definitely real estate as well, because again, that will be a shift between a seller market in which we are now, and we're going to be in a buyer market. In a buyer market, you can find really, really good discounts and make sure that, hey, you buy now, like it was the case in 2008, and then few years later, you'll be definitely making a lot more money, at least on the equity of the house you just bought. So these two are definitely one way to go. But bottom line is, if you want to position yourself now and make sure you profit from recession, in the case we have it, cash will be king. It didn't make sense back then that you have cash sitting on the sidelines because it wasn't producing any money. But as we get into a possibility that we may have a recession coming, you need to make sure that you have some additional money sitting on the sideline, either to buy stocks, either to buy real estate, or maybe to buy a business.